This is the Real Estate Connect podcast, bringing you knowledge on all things real estate, from buying to selling to investing. No topic will be left untouched. If you're a first-time home buyer, just have an interest in real estate, or a question that needs to be answered, you're guaranteed to find it in one of our episodes. Licensed in both Georgia and Illinois, a previous team leader for Keller Williams Realty, and currently the owner of Maison Fleur Realty Group, with locations in Chicago and Atlanta. Here's your host, the Real Estate Connect herself, Sharina Flowers.
What's up, everyone? This is Sharina Flowers, your host of the Real Estate Connect podcast. And today we have our guest, Quanyatta Benson of Altera Home Loans, here with us to talk about financing your home purchase. Quanyatta, why don't you go ahead and introduce yourself to our audience?
Hi, Sharina, and hello, audience. Thank you first for having me on the show. I really do appreciate it. Well, just a little bit about me. Again, my name is Quanyatta Benson. I am with Altera Home Loans. I have been in the lending mortgage industry for about 20 years. Yeah, 20 years. That's a long time. But, I love what I do. I have two wonderful sons. I also have a consulting business, and I'm a licensed mortgage professional in about 4 different states right now. So again, I absolutely love what I do, and I'm looking forward to sharing this information with your audience.
Excellent. Well, thank you so much for agreeing to come on the show today. We are going to be talking about financing your home purchase and getting these questions asked that my followers ask all the time. And a lot of the questions that you and I get when we host our first time home buyer workshops. We're going to jump right into the meat and potatoes so that we're not wasting anyone's time. The first question is going to be, what's the first thing that someone needs to do to prepare to purchase a home?
Okay. The first thing you need to do is be realistic about your situation. And the only way to do that would be, number one, to, gather your income documents. And then number 2 would be to actually review your own personal credit report. Now, if you aren't very knowledgeable about credit and so forth, then I would advise you to speak with someone who is. Not your friend, not the pastor at the church and all that kind of stuff. Someone who actually has that knowledge about, working with credit and can explain to you, the significance of certain parts of the report.
Okay. So while we're talking about credit, before we move forward, what is credit and what role does it play in becoming a homeowner?
Well, credit is, I guess you could say, basically your written billboard as far as how you are able to pay your bills and basically manage your finances.
Like a report card, huh?
Exactly. That's exactly what it is. And from there, what we as lenders, we take a look at that along with your application, along with your income, to determine what type of programs you qualify for, as well as how much of a down payment you would need to have, along with what your particular interest rate will be on that program as well. So the credit report itself and your credit scores, that basically gets you through the gate.
Okay.
But there are other things that's necessary to get you actually to the table and ultimately into your home.
Okay. Before we get into those items, the majority of first-time home buyers that come to me trying to find out what they need to do to purchase a home have credit challenges. And so immediately they'll say, oh, well, I have a 490 credit score, or I have a 530 credit score, or something like that. I got to get my credit up before I can buy. I probably won't be ready for a year or 2. How realistic is it for them to increase their credit score 100 or 150 points to put them in a position to be able to purchase a home?
It's very realistic. The key to it is knowing how to do it. So either the individual needs to have enough knowledge about credit and how it works to do it themselves, or they need to have the ability to work with, a credit specialist. A lot of people, they're out here doing credit repair and so forth. It doesn't necessarily mean that they have the knowledge that's needed for the mortgage part of it. There are different credit reports. Each lender or each type of financing has their own specific credit report that they pull from. So what may work for an auto loan may not necessarily work to help get you into a home.
So how fast have you seen credit scores jump? Somebody needs a 100-point credit score boost. What's the fastest that you've seen it happen?
Well, I've personally been able to help someone increase their scores 135 points, and that happened in 3 weeks.
In 3 weeks, so in less than a month. So I just wanted to really put that out there and let people hear it and understand that it does not have to take 6 months and it does not have to take a year for your credit score to go up. I get so many clients that have paid somebody to fix their credit, or they're currently working with someone to fix their credit and their score is not changing and things are not moving. And it's frustrating for me because I know that it can be done faster. Yes. But people get so caught up in not wanting to lose money, but they would rather lose time. I understand that, you paid this money to this person and you expect them to deliver. But after 3 months or after 6 months, if your credit score has not risen, this person is never going to deliver. So instead of moving on and paying somebody else to actually repair your credit and get it done right, they would rather sit and wait and sacrifice their home purchase because everything else may be okay, but, they just don't want to not use that person, or they don't want to feel like they failed or lost money on the credit repair person that they use. So thank you so much for sharing that with us.
You're very welcome. And I just want to add one little thing to that. Time is the killer of all dreams. If you're, if this is something that you're serious about doing, speak with someone who can actually help you to get there. First off, like yourself, you're a real estate professional. You're a realtor. You've gone through the training. You've gone through, your continuing education. You have a slew of clients that you've helped in the past to get that person to where they want to be. Same as myself. 20 years, I've helped, I've helped so many people to be able to purchase. I know about credit. Go to people who actually have the knowledge, not people who are just recently into credit repair and then thinking that they know, everything about it. And then they bring some newly acquired information to us seasoned people. And at that point, we're thinking, okay, are they really serious about, making a change or doing something different in their lives?
Right. Absolutely. So moving on from the credit piece. Well, no, not yet, actually, because for Alterra Home Loans, what credit scores do you guys look for?
We have programs where credit scores start at 580, but typically a 620 would be better. But if you're in a position to where you have at least a 580, then you can still qualify for great programs with very little money down.
Okay. And so how important is it to get that 620 score over the 580? What's the difference?
So the difference between the two, it comes down to your debt to income ratio. So if your credit scores are below 620, then you're capped at what is 43% of your gross income, along with the debts that you currently have on your credit report. If your credit score is above 620, then you have a little bit more flexibility and you can go up to about 50%. With just that little, bump in your credit score, it could take you, from qualifying for a $150,000 home all the way to qualifying for a $200,000 home, just by, improving your credit scores with roughly 40 points.
Excellent. So we can move on now, since you brought up the debt to income ratio. Let's talk about that, because that's the other factor in someone being qualified
Yes.
purchase a home. So explain to us a little bit more what the debt to income ratio is and how you guys actually figure that out. If someone in the audience wanted to kind of figure out where they were in terms of their debts and their incomes, they would have an idea of what they're looking at percentage wise.
Basically, the debt to income ratio means, I'm going to break it down into just the simplest of terms. It means the total amount of your monthly debts that's showing on your credit report divided by your gross monthly income. Whatever the monthly bills that you have on your credit report, you add those up, and then you take that and divide it into your gross monthly income. So at that point, what we do is based on the amount of home that you qualify for. So we would take that new mortgage payment, add that back into the current debts that you already have on your report, and then divide it by your gross monthly income, which comes out to be your debt to income percentage. And again, if your credit scores are under 620, then you're typically capped at 43% of your gross monthly income.
Okay. What else does it take? Because we got credit, we got debt to income ratio. So just having good credit does not automatically qualify you to be able to purchase a home. So what else? What's another factor that you guys look for?
Income and employment. Even a person with a 700 credit score, when it comes to a mortgage, they have to show stability or the ability to repay the mortgage. So you have to prove income. You have to show where you're getting this money from to make this mortgage payment every month. So with that, if you're self-employed, we would need at least 2 years of your federal tax returns. If you are, an employee with W-2s, then we need 2 years of those W-2s. And that's 2 most recent years. I had a person not too long ago that tried to give me W-2s from 2012, 2013, and asked if I could qualify them based on this income. And I said, no. So again, with the borrowers who are, employed and getting W-2s, we would need the 2 years of most recent W-2s along with 30 days of pay stubs.
Okay. In talking about jobs, we get a lot of people that make career changes or they just recently started a job. How long does someone have to be working on a new job before they can apply for a home loan?
As long as there hasn't been an extended period of unemployment, meaning 30 days or less, then if they're staying within the same profession, they can basically leave one job and go to the next one and apply for a mortgage that same week.
Okay. So what happens if they're doing a career change? Then what happens?
So if there's a career change, the previous employment history is still taken into consideration, but we also need to have, just say for instance, any new certifications or degrees that they may have received in order to go into that new profession.
Okay.
There's always ways to use that new income to be able to, establish an actual employment history or good employment history. We just need to have those details up front, opposed to, waiting until it gets to the underwriter and it all comes out.
Okay. So in talking about being able to pay the mortgage as part of what you guys look for in terms of qualifying for the home loan, what kind of savings or what kind of money does one have to have saved in order to purchase?
The rule of thumb for me is have at least 3.5% of the purchase price of the home. So most people, even before they come to me, they have an idea of, the price range they want to be in because they've been riding around and they've seen, the different homes and subdivisions and so forth. And they're like, yeah, this $300,000 home, this is me. Now, we haven't established if they could actually qualify for that $300,000 home yet, but, as they're preparing, they need to have those funds set aside. So for the sake of easy numbers, if you're looking at a $100,000 home, you need to have at least 3.5% for your down payment. So that translates to $3,500.
Now, what about closing costs and things like that? Because usually what I would tell people is have at least $5,000 saved and in the bank. Do you agree with that? What would you say in terms of preparing to pay for closing costs and stuff like that as well?
Definitely. I definitely agree with having, your own funds to be able to contribute towards closing costs. So let's go back. I think we need to educate people on there's more than just down payment that's associated with buying a home.
Okay.
So you have your down payment, which is the difference between the 96.5% and 100%. You're making up that gap, or whatever the loan to value is for that particular program. Or, for conventional, it's typically 95%. So with the conventional, you would need to have at least 5% down, and that's 5% of the purchase price. In addition to your down payment, there's also closing costs. And this amount, or those fees, consist of your actual lender fees, your appraisal, the attorney fees, even all the way down to the smallest thing of the recording fees based on the different county in which you'll be purchasing. So that's completely separate from your actual down payment. A lot of times, people will say, well, I have my down payment, but you didn't say anything else.
Right.
And I'm like, yes, I speak of down payment and closing costs. So now I try to break that down to let them know that these are two separate numbers, so they can be prepared to have money for your closing costs, just in case if the seller isn't in a position to assist with that.
Okay, absolutely. I'm glad you said that. So talking about down payment, I get tons of people asking about down payment assistance and having their down payment paid for through a program. Do you all offer down payment assistance programs through Alterra?
Yes, we do. And we have an in-house down payment assistance program, which I absolutely love. One of the best parts of this down payment assistance program through us that differs from some of the others that are out here, it's only a one-time underwriting, meaning you can still close within 30 days and still be able to obtain the down payment assistance, opposed to some of the other programs that are out here that would take you anywhere between 45 to 60 days. And they're having to not only having to go through your lender's underwriting, but you also have to go through the down payment assistance program underwriting as well, which makes that double work for the buyer.
Right. Exactly.
So yeah, and the one of the other awesome things about our down payment assistance is it isn't capped on, the income limits aren't capped, and it isn't specific to a county. Since we're, talking about our lovely state of Georgia, you can qualify based on any county in which you want to purchase. I think that in itself allows more people to qualify, opposed to having to live in a specific county and have to stay within a certain income bracket.
Right. We get a lot of people that ask about Georgia Dream or want to go through the Georgia Dream program. Are you guys approved to offer Georgia Dream as well?
Yes, definitely.
So for the sake of time, I want to ask you what makes you unique from other loan officers? What separates you from everybody else? Because we have a ton of loan officers out there. And I think in terms of the company that you work with, the down payment assistance program that you all offer in-house is one of those amazing things that you offer. But you as an individual, along with the company that you work for, what separates you from everybody else?
I think it's my love for not only the business, but the love for, the individuals that I have the pleasure of working with. It isn't just a check for me. I take time to actually listen to your goals and to help you figure out the best options for you and your family. So outside of, just getting a person to closing, I want to know what it is that you and your family plan to do within the next 2 years. I'm going to ask those types of questions, because if I didn't ask that question and you're a first time buyer, but your goal is to move into a new home or move up within 3 years. And if I did not ask that question and I put you in a mortgage that had a prepayment penalty that was over 3 years, then I haven't done a good service to you, because I didn't dig a little bit deeper just to see exactly, what's your long-term, or not even a long-term, but maybe your short-term goal outside of just doing this particular transaction. So I like to take time to actually, get to know the people that I'm working with. So I'll be able to provide better solutions to whatever it is that you're trying to accomplish.
And you know what else I like about you, Quanyatta, because I get a lot of clients that come to me that no longer want to work with the loan officers that they're working with or the agents that they're working with because they haven't been properly educated. And so that I love that about you, that you actually educate your clients, but you also ask them, how much do you feel like you can afford in terms of a mortgage? And just instead of just taking their paperwork and their numbers and saying, oh, you can qualify for a $400,000 home. But you know, that person may not want to pay a $3,000 mortgage payment. They may only want to pay an $1,800 mortgage payment. So I appreciate and I love the fact that you actually take into consideration their wants and their needs and their desires to reach their goal, as opposed to just trying to get them sold.
Thank you very much.
Absolutely. No problem. So before we go, just tell us, what are a couple of the most popular mortgage programs that you all offer for first-time home buyers?
Well, the most popular would be our government programs. So that's your FHA, VA for your veterans or current military. And then we also have a conventional. So those are the main three. Well, conventional is in the government, but the two, FHA and VA, those are our government programs, and then conventional. But the majority of first-time buyers, as well as your move-up buyers, will qualify for FHA.
Okay.
And the FHA program allows you to have a lower down payment. So instead of having to have 5 to 10% down, FHA will allow you to have 3.5%. So it makes it a little bit more affordable for your first-time buyers, to be able to get into a home with money down that's reasonable. So that's one of the reasons I absolutely love FHA. It's also a forgiving program. And when I say forgiving, meaning if you've had some, credit challenges in the past, if it's outside of a certain window, then FHA doesn't even count that against you anymore.
Okay, speaking of credit challenges in the past, what about our clients that have had foreclosures, short sales, or bankruptcies in the past? How long after those things have occurred can they apply for the home loan?
Okay, so with your bankruptcies, depending on the type, if it was a Chapter 13, typically, if you have the credit scores with a Chapter 13, you can actually qualify a day after being discharged.
Okay.
A Chapter 7, it's 2 years.
Okay.
And then if you've had a foreclosure in the past, on average, it's about 3 years.
Okay.
So you don't have to
hope, because they think, they have to wait till that 7 years is up when it's off their credit before they apply. So they don't have to wait that long.
Yeah. So that's what I was just going to say. You don't have to wait a lifetime in order to get back into it and try it again. Mm-hmm.
Okay. Wonderful. Well, tell our audience how they can get in contact with you if they would like to ask you some questions about credit repair or go into more detail about their personal situation, trying to find out how they can purchase a home loan. How would they get in touch with you to do that?
Well, the best way would be to email me first. That way I can keep up with everybody's information and be able to respond back in a timely manner. Okay. So my email address is qbenson, and that's BENSON at GoAltera, ALTERRA.com. And you can also call me. My number is 678-824-5257. And if you are just that person that want to go ahead and knock this thing out, you can go to my website and complete the application. And that is qbmortgagepro.com.
Excellent. And they could actually complete the Altera application directly on that website. Can they also upload documents as well?
Yes, you can upload. Once you've created your profile, it's secure, and you can upload all of your documents through that portal, and I'll be notified and be able to retrieve everything from there. So we try to make the process, quite simple, to where we're not shuffling a lot of papers these days.
Awesome. Well, thank you so much for joining us today, Quanyatta. I really appreciate you coming on the show and answering those questions for us today. Thank you so much.
Well, thank you, Sharina. And I appreciate all that you do, because you really go above and beyond, what is required of a realtor in order to educate and help people become homeowners. And I really, really do appreciate our partnership. And I'm just so excited for all the great things that are coming your way.
Thank you. Well, on that note, we can close it out.
Today's episode has been brought to you by Nadia's Pure Relief Skin, Hair, and Body Care. Our products are all natural, organic, halal, and kosher. Find us online at nadiaspurerelief.com. That's NAADIAS, purerelief.com, or stop by the Blue Lady Wellness Boutique located at 1805 West 95th Street in Chicago, Illinois.
Thank you for tuning in to another episode of the Real Estate Connect podcast. Don't keep us a secret. Tell a friend to tell a friend and step your real estate game up.